Good evening, everybody, and thank you all for joining Wealth Wednesday tonight. We have a special guest, Miss Syreeta Wright, and she is going to talk to us all about insurance, protection. That's one of the main things we have to consider, and we've been kind of talking about over the last couple months, but she's going to dive in a little bit deeper. I want to introduce Miss Wright and also give her an opportunity to share her a little bit about herself and how she got into the business.
Okay, awesome. So, yes, as you stated, I am Syreeta Wright, a life and retirement protection agent. Um, I am a mother of two beautiful sons, and I'm a person who's done taxes all my life since I was 16. But I'm very efficient, very happy with what I do every day. But I wanted more, and I prayed and asked God, give me something where I can help people and I can be successful in helping people. So the answer that I got was life insurance. And I had avoided that for many, many years. I got many, many offers, and I was like, I don't want to get licensed.
Right.
But it has been great because I've been able to share my story with people, to encourage them, to support them, and push people past their fear. And it's nothing better than being able to push people past their fear to something that you know is going to help them and their family. So I'm very pleased with the path that he has led me on.
Yes. And we are so glad that you are here tonight. Miss Sarita actually was in high school with me
Yeah.
briefly. So as you guys see, I've kind of pulled from the past. I had Jared on a couple weeks ago, Sarita on now. Look, if you are a resource and a benefit, and of course, if you're in alignment with faith and just knowing that God is first in everything that we do, I'm always welcoming of those people, because it's important for
Yeah.
me.
Yeah.
So, like I said, today we're going to talk about building wealth beyond the bank, understanding index universal life insurance. And to get started, if you could kind of just tell us what is an IUL? A lot of people don't know.
So an IUL, like you said, is an index universal life insurance policy. It's lifelong coverage as well as cash value. So it puts those two aspects together in one policy for you.
Okay. And what I will say too to begin is I wanted to do this as well because most people, when they think about life insurance, they only think about the death benefit and they
That's
don't want to talk about it. We don't want to talk about somebody passing, somebody,
correct.
somebody not being there. And
Yeah.
that fear keeps us from making sure that we're covered. And then something happens and we've left our families scrounging around trying to figure out how to take care of services or just how to take care of the family without your income, without you being there.
Yeah.
And this is an opportunity for you guys to see the other side and the other benefits, the living benefits, things that could help you if something happened to you and you were hurt, money that you can invest. I mean, it's so many ways that this can expand. And I think that it's important that people understand that it's not just about dying, it's about living and placing your money where it needs to be so you can grow and be covered and feel that peace. Um, so that's something that's very important to me because I see the fear and people, oh, we don't want to talk about that. We don't have to talk about that. And it's like somebody passes and then we have to talk about it and it's
Yeah.
too late to talk about it. And so I think it's very important.
Yes.
So
People perish for a lack of knowledge.
yes.
It's just because they don't know.
Yep.
You know,
Yep.
fear is a form of resistance, and not knowing will slow you down. It'll keep you from diving in,
Yep.
and you'll perish just by not knowing.
Exactly, exactly. And we're supposed to be learning constantly. God wants us to continue to grow and learn, especially in a way that would benefit others and honor Him. So,
That-
this is another opportunity for us to do that in a different way.
yeah.
So, moving on to some additional questions. How is it different from term life insurance?
So it's different from term life insurance in several ways. First of all, term life insurance is for a period of time, perhaps 10, 20, or 30 years. Once that coverage period ends, unless you renew, it's done. That's the first way. Generally, term life insurance policies have a lower premium, And that's because there's lower value. Still a great option to have. It's like with the car, if you have a Honda and your Honda is working, getting you to and fro and getting you good gas mileage, that's wonderful. But if you rather have a Ferrari, that's what an IUL is. It's the Ferrari of insurance, okay? It's great for replacing your income, like mortgage protection
Mhm.
and protection for your children. So term is really good for those two things if you're looking to protect your children and to protect your mortgage so that when you pass away, your loved ones aren't figuring out what they're going to do with the house, how they're going to pay for the house, you know?
Yes.
And then, like I said before, the coverage ends when the policy ends unless you renew it. And so those are some of the key differences between a term policy and an index universal life insurance policy.
Okay. Well, what about the difference between IULs and whole life insurance?
So IULs and whole life insurance, the difference is how the cash value actually operates. So whole life insurance cash value grows based on a fixed interest rate, while IUL cash value is tied to the stock market index performance. So those
Mhm.
are two different ways that it operates. While an IUL cash value is tied in one way, it's different from the fixed actual rate.
Got you. Got you. So why are more people talking about IULs these days?
I think that more people are talking about IULs because information is being sought after more than ever before. That's one thing. Information is going out faster than ever before, and testimonials are supporting the journey. So, for people who grandmother or great great grandmother left their family six figures, it changed everybody's life. It changed down to the babies.
Right, right,
Down to how they build, the businesses they start, the things that they develop, they poured into, the business strategies they learn. And it's spreading like wildfire because people are learning that there are benefits out there that we didn't have because we didn't have the knowledge. And so people are seeking the knowledge. And then you have people like you and I who are sharing the knowledge.
right.
So when you share knowledge, it's like rubbing wood. You're like sparking a fire and the fire grows.
Yes, absolutely. So is there anybody that should consider IUL versus someone who might not?
Well, anyone who is looking for both potential for investment growth and insurance coverage can benefit from an IUL. More specifically, you can use this to invest and become your own long-term banking system while taking less risk than you would if you invested directly in the market.
Yeah. So I want you guys to know that life insurance is not a one size fits all. Different products are designed for different goals. So make sure that you sit down with someone like myself or Sarita so that you can understand what it is that you're getting. What are the benefits of it? Because it could be a mixture. You might have a certain term life policy and an IUL. Your family dictates that, what your particular situation is, your income, what you can afford. There's a lot of things that will change that, and so you got to make sure that you sit down with a professional who is licensed and can explain those things so that you get the more bang for your money, as we say. Because it's important, right? It's important. If we're talking about wealth and growing wealth, we've got to know how to manage our money best and then protect it. We have to protect our assets. So give me a little bit more about what the cash value looks like. What is cash value?
So, cash value for life insurance is a type of permanent insurance that can earn interest, help pay your premium costs, or allow tax-free withdrawals. That's the part most people like.
Right.
Cash value accumulates over time through contributions from the policyholder and interest that is credited to the insurance from the insurance company. So, when a policy is, oh, I'm sorry, I'm probably getting ahead of myself, but
That's
I'll leave
okay.
it there.
If you got it, hey, we're
Yeah.
down for the information.
I got a little ahead of myself, but it accumulates over time with the policyholder's contributions and the interest that's credited to you from the insurance company.
Got you. Got you. All right. What does it mean when a person says the policy is linked to a market index? I know you just said that the IUL is tied to the stock market index. What does that look like?
So when it says it's tied to the market index, it means that the value of the policy is tied to the performance of the actual index, whether it goes up or down, how the stock actually participates. So the link is why it's a index link policy.
And do you guys see that? That is a part of investing. So if you're kind of nervous, like a lot of us are, to just go right to the stock market or right to, all these other things that are available, this is a way to do it where you're still benefiting in different ways for the same amount of money. You're not putting, okay, I got 100. Not that you shouldn't, not that you can't, but this is a way if you have limited funds to be able to invest, grow your money, as well as be covered. So this is important information, and I want as many people as I can get to understand the differences so that they can grow and teach their kids. And even within their own households, when they realize it's a lot less expensive for the kiddos, right? So go ahead and get their policies when they're younger and allow that to grow. There are a lot of people that they started young. By the time their child is done with high school, they're pulling that money to pay for college. So they don't have all these student loans like myself.
You are not alone. Lunch money is what I call it. What it
Exactly.
costs to give your child a policy that they can use for college is lunch money. I
Exactly.
probably spend the same amount on my son's policy as I do in one trip to Chick-fil-A,
Yep. Exactly. If we
honestly.
just stop one thing, that money could be transferred into something that will grow money. And that is a part of wealth building, guys. This
Yes.
is important information, right?
Yep.
So we're talking about let's see. How long does it take? I know a lot of times when you do 401ks and you do other things, you got to be, vested and, involved for however long. Kind of tell us, long does it usually take to build some meaningful cash value?
Oh, now that depends on a lot of factors.
Okay.
Because when you get a policy, this type of policy
Mhm.
specifically, there
Yes.
are different things that the insurance company looks at. For one thing, they look at your age.
Hmm.
That's a determining factor. Your tobacco use. So
Hmm.
if you use tobacco, that has a high effect, believe it or not, people
Right.
don't know. Your health as far as your height and weight.
Hmm.
That's a
Your
factor to be
BMI.
considered.
That
Yeah.
BMI we running from.
And we don't know that when we're eating soul food, right?
Right.
We don't know that, but it's the truth that your height and weight and what's actually on your medical report. So we have a medical report that's just like your credit report or your insurance report for your car or anything else. That medical report is going to show information. People sometimes say, "Oh, I have this or that," all kind of issue that they might not even completely understand what they're going through, and they're thinking it's one thing, and it's not even exactly what they think. And all these things are building up on a report. And
Hmm.
so, of course, there's a risk assessment that is attached to that. And those are determining features. One other thing people don't know is your criminal record is a consideration for your benefits as well. So if you've had like a felony within the last 10 years, a lot of times that can limit the coverage that you get in order to give you the accessibility that you want. And so people get upset and say, well, I didn't get a good da 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 da. But you have to look at your own behaviors and what you've done in your own lifestyle and know in advance that if I make this rash decision, it affects other things much further in the future down the line. And so that's why we have to make good decisions because
Right.
all those things affect it, and no two people are the same either. So it's really dependent on those particular factors that they're looking at when you're applying for an insurance policy and trying to get the Ferrari versus the Honda.
Right. Right. Absolutely. So could this be used for emergencies, business opportunities, education? We kind of touched a little bit on it.
Yes, and it's all dependent on the policy,
Right.
right? A lot of times, the medical emergency is what qualifies you. There are different qualifying factors. And with certain benefits, absolutely, you can pay off college tuitions. And like if you have a child whole life policy, you can actually take that money out and use it for your child. So it really just depends. I would say yes, for
Yeah.
sure. Those are all options. Mhm.
Absolutely. So I want you guys to think about this while we're dealing with wealth, right? If you know that in 5 years you would like to pull out a certain amount, to buy a new house or, fund college, fund a business, whatever that looks like. This is also something that could benefit you. I'm kind of jumping around a little bit, but I just thought about this. I know with IULs, you generally have your regular premium payment, right? And then you have an amount over your premium that you can invest as well. How does that work and what kind of determines that amount?
So if you want your interest to grow faster and gain more money, there is, and generally when you go into underwriting, they review the policy, they say this is the amount you can pay over if you want to, right?
Gotcha.
So if your policy is only $75 a month, but your budget allows for $100 a month because you cut out one Chick-fil-A trip, right?
Right.
And you say, let me just go ahead and put the whole 100 on there. You can
Yeah.
add more and it's gaining interest and your cash value is growing faster because the principal is higher.
Mhm.
So if the time period would have been 4 years before you can actually pull out any cash value, by paying a little bit in advance into that principal, it might go to 3 years.
Mhm.
And if it would have been 5,000 that you could pull out in your cash value, it might go to 6, 7, 8,000
Right.
because you have poured more and invested into yourself and your policy, and it's doing its job. When you actually put your money into an IUL, you get all your interest out of it. If you set your money in a bank, you get what? 0.01%.
Right, right.
And the bank actually invests in an IUL. When you put your money in the bank, people don't know that the bank just takes your money and puts it in
And
an
holds it over there.
IUL.
Yep.
Uh-huh. And if they get 14%, you get 0.01%, and they get the remainder. So,
Getting your
um,
money.
yeah, so putting more in advance is the smartest way to build more for your future, for you and your loved ones.
Absolutely. So
Mhm.
last week and the week before on Wealth Wednesday, we talked about a couple ways to save money, the snowball effect and the avalanche effect, and taking just a little extra and adding it to something to get it paid off earlier. Well, the IUL seems to have that same type of thing. It's like just a little extra. We're
Yep.
not telling you now if you have an extra $500, by all means do it, right? But if you only have, you know what, I'm going to cut out one Chick-fil-A drive-through order to put this extra $25 over here for
Mhm.
my insurance to grow because you don't know what might happen and when you may need to pull that out and how fast it could potentially grow. You just want to make sure that we're taking the money that we have and we're putting it in the right places. And the right places are anywhere that keeps us stable. So, of course, housing, bills, things like that. And then the other way is to put it somewhere where your money can grow because all of us work, but we don't want to work hard anymore as you get older. So putting things in the right place really helps prepare yourself for your later years and then prepares your kids for
Yes.
their upcoming future. So it's very beneficial. And I'm just kind of tying these things together because I want people to understand this is all wealth building, right? This is another level of wealth building. And it's important. It's important to make sure you know what's going on,
Right. And your kids are listening and they're paying attention. My
right?
19-year-old, I say, this is this, put this here, move this there, do this like this. He
Mm-hmm.
can repeat it back to me 6 months later.
Yep.
And say, oh yeah, I took that extra money and decided to trade and over here and do that. And I decided to, they are paying attention in this age, like I said, where knowledge is growing so fast, they are paying attention. So teach them early, create these habits and let them be generational habits moving forward.
Absolutely. So they can teach their kids, your grandkids, and so on and so forth. And then you're creating generational wealth. Even if it starts with you, that's okay. Let
That's
it
that's a
start with
great place to
you.
start.
Yeah, let it start with you. Because we want to be wealthy. We want to be good stewards of the money we have now so that God will bless us with additional things that we
Yeah,
want and or need to make sure that we're living a life that's comfortable for us, right? But we have to make sure our money is going to the right place. That's very important. So tell
yes.
me a little bit more about the living benefits.
So living benefits provide the benefits while you're still alive. Like I said, if you get sick, they combine the income with your health protection, which is very important. Um, Situations that are commonly covered are cancer, a stroke or a heart attack, ALS, kidney failure, Parkinson's disease, and some other. organ failures. Those serious illnesses are really what kick in. And people feel like I'm healthy, I'm strong, I don't need this. I can name the healthiest person I ever met. And there was just an incident beyond their control. They were in a place and time, they were in the place they were supposed to be at the
Right.
time they were supposed to be there. And an incident happened and it affected their health for the rest of their life. They developed a health condition that as long as they live, they will have, and they've
Mhm.
done the surgeries and everything they're supposed to do. And imagine being a six-figure earner, everything is fine, and you don't have living benefits, and then a medical emergency happens, and now everybody is leaning on you for all the things you do, and you can't do any of it because at any minute you might perish. And so that's why I
Mhm.
tell people it's so important. Don't look at it like I'm healthy now because the difference between health today and tomorrow is not your vegetables.
Right.
That lives.
Yeah, absolutely. People really need to think about that because, you know, cancer is like rampant, and again, when you already have pre-existing health concerns, your policy could potentially be a lot more. We won't know until we, of course, sit down with you and get all the information, but
Right.
it's probably going to be more. And as you get older, it costs more. So again, young people don't want to talk about it. Oh, I'm, 25, I'm whatever. Look, get it now because the difference between 25 and 45 could be 100 or $200 for a policy with the same exact amount. And if
Right.
you start early, that's just that much more. And think about it. If you were to get sick or hurt and you're still alive, and your kids are there and your spouse is there, right? And now you got to worry about bills too. You can't even get your treatment and get the things you need in peace and think about just your health and well being. You got stress of the financial burden. So it's important that we make sure that we understand living benefits as well and how those can cover critical illness, cancer. I mean, it's important. And just like she said, there's other things that could stop you from getting a policy or the amount of policy. And so you have to consider those things when you're doing this. So let the young people know, get
Yeah.
the life insurance now. It saves you money. It saves you money in the
Because
long run.
my heart
Don't,
goes out to people who are young who get sick
yeah,
because funny enough, I had somebody reach out to me and say, Sarita, I have this illness, nothing to do to earn it, and I can't get a policy, it's too expensive. And it made me go research. I was like, how can I help this person? Because if they came to me, I want to do whatever I need to do for the solution. So
right,
I literally just took my time, like, let me just put a pin in it, right? And started doing research and went to find out how I could. And then I went to find out what company would give them coverage, even if they had to pay more, right? Because of the
right,
circumstances, because they're around our age. And I was like, okay, let me reach out to the carrier. How can I get contracted? Because anybody in this situation, I want them to at least have an option. Hey, let me give you an option. Let me give
right,
you, a solution where you feel hopeless because my heart goes out to people who nobody you can control certain things. They're
right,
hereditary, genetic, and a lot of times you have no control and there are options. So for anybody who's discouraged, there are options out there, but seek
right.
people seek to help you.
Absolutely. And that's what I was just about to say. I love bringing people on this platform that have the servant's heart of God, right? Because
Yeah,
that is a part of our job to be and to do. And being aligned with someone who has that same thing, you can trust that that person is going to look deeper and they're going to try to help you. That's the first thing. Yes,
yeah,
money, we need to pay our bills and we got things we want to do, but can I help you? And that's why I created this platform. That's why I invited Syreeta on because I know she's God fearing. Stands on her faith and she is here to help people. And
that's,
that is what we were put on this earth to do. One of the primary things. So just like you said, find someone. You don't have to go with the first insurance agent that you find. Now, we would love if it was us,
that's a fact. That's a
but
fact.
just make sure that
Yeah,
you're talking to someone that has your best interests at heart. They're not just getting to how much you want to spend. They're
Right.
getting down to, well, how many kids do you have that you'll have to cover? What income do you have that needs to be covered if something happens to you? Because those are important. Okay, you have this illness. Let me find a resolution. If there is one to be found, I want to find it.
Yeah.
That's the person you need to go to. Okay. So just a little tidbit for me. And that's the people that I bring on because this is what the mission is. If
Yeah.
we can help you, you help someone else, and we're all doing better. They say, know better, do better. So that's what we're trying to do here.
That's right.
Exactly. All
Mhm.
right. So, what we did kind of talk about some of the situations that would happen where someone could access those things.
Mhm.
Why should someone read the policy details instead of assuming every policy includes the same features?
Read the
Seems
details.
pretty self explanatory,
Read
but
the details. And,
exactly.
and and I'm gonna tell you why. Because some people say, well, my mama got hers and my mama had this. But the details are not the same.
Right.
There may be stipulations to adhere to, right? There
Yep.
may be dates that the policy matures, like how I talked about the 4 years until cash value is available.
Hmm.
There may be a difference in the time periods, the amounts that are determined, what year in the policy you can make different changes. Read the details. They used to say it's all in the fine print,
Right.
right? And so that's why you would see a medical commercial and they'd be skipping through all happy. And then you would see in teeny, 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 tiny fine writing, may cause a
Right. And
because
most of the time, the things are worse than the first
those
thing you
things
were
are
taking
worse.
the medicine for.
And I'm gonna tell you the one at the end when they say, and maybe even death.
Right.
And people would miss that altogether. I'm trying to get rid of a migraine, and maybe even death is the last thing that you're saying in the tiniest writings. So
Exactly.
read the details. Okay.
Right.
The money's
And
in the
it's
details.
And it's just like anything else, guys. If you're not doing it, start now. When you buy a car, when you buy your house, when you, whatever it is that you're doing, especially if it's something with your money, make sure that you understand, well, how long will it take for me to get that out? How much can I? Make sure that you get specific details and you read it for yourself. Now, once you read it for yourself and you need additional explanation, yes, you go to that person who is helping you with that policy, but make sure that you read it. Make sure that by the end of the signing of it, you understand what this policy means. Because when you're in a critical situation, as I've said with your finances, being prepared means you have an inconvenience if something happens, right? Because I already got the policy. I'm hurting, I'm sick, whatever that is. I've got this going on, but at least I know this is over here. When you don't have it and you don't know that it says you got to have this for this or whatever the details might say, now it's an emergency, a crisis because you're not prepared. Make sure that you're reading all of the fine print. Okay.
And one more reason to read the
Yeah.
details is because you need to discuss this stuff with your family. You
Yeah.
should have a plan. I know from personal experience with one of my close family members, nobody was worried. She has insurance, right? But there was no plan in place.
Yeah.
So when she passed away, and we're all like, she has insurance, she had already pulled out the value of her insurance and exhausted the
Mm,
the actual cash value was surrendered. There was nothing left. But
right.
because there was no conversation about details and the time period that they turned from covered to not covered, there
Mm,
was no plan. So if nothing else, read the details so that you have a plan. Everybody understands because one of the worst feelings is grieving for somebody you love so much
yeah.
and trying to figure out what to do next. And everybody, emotions are high. You know what I mean? People are feeling all kinds of ways, and now we're trying to manage. And it could be little things like the program, like the
Right.
obituary, like, and everybody starts to kind of melt in their own different type of way because the plan wasn't in place and there was no understanding. So, no, understand the details, share them, and when things change, share the plan, the change. That's one of the
Yes.
biggest reasons I say read the details is because you want to make sure everybody's on the same page because
Right.
that will keep a lot of dissension um, apart from your loved ones because harmony is what you need during grief.
Absolutely. And
Mhm.
that's, again, even past your finances, your last days are your last day and your memory is yours, right? So make sure that it's protected. Make sure that you can leave people with peace and ease. They're already grieving the loss of you. Don't have them grieving the loss of money that they didn't have to try to do things. Prepare yourself. This is creating the wealth for the next generation because it keeps going, and we got to make sure that we're taking care of ourselves. So, how can life insurance, and again, we kind of touched on some of these things, kind of fit into the broader wealth building strategy?
So this is my happy place
Yes.
right here, right? There are multiple ways. Final expense, of course, to keep the generations from having to pay to bury you, like we just
Mm-hmm.
talked about, right?
Right.
The next one is death benefits, which are used to leave wealth to your loved ones if you want to give more than you got. A lot
Right.
of times we do things because we want to give our family a better life than what we had. That's the way to do it.
Right.
Okay. Death benefits. And like I said before, becoming your own bank, right?
Mm-hmm.
Where you come into a lump sum of money, right? Let's just say you got a settlement. You were in an accident, for example, Lord forbid, right? And you take that certain amount of money, you put it into a policy, and you make it pay you every month for the rest of your life.
Mm-hmm.
People don't know that. That's wealth building because whatever else that you do, you're building money on, you're still paying yourself for the rest of your life. So I know plenty of people who say, oh, I got money from this or that. Even a parent passed, and that
Mm-hmm.
$200,000 was gone in a year.
Yep.
If you would have put it in that policy, and now your kids need things and you don't have them and you're struggling, you could have use that to build the generational wealth that your loved one who left you the
Right.
$200,000 wanted you to have. So that's another way to do it. And the benefits can replace the income of your family for the primary breadwinner, right?
Mm-hmm.
Which is not specific for me and people I know, it's not specific to gender,
Right.
position in family.
Right.
There are people who are 20 years old who pay the bills in their house to take care of their mother and all their siblings.
Right.
And if something happens to them, they are the primary breadwinner. Well, you need to
Right.
replace their income so that all is not lost once they're no longer with you. So that's a super duper benefit to me, the way I see it. And benefits such as mortgage protection, which I touched on before, can pay off your house. So if you pass away, you still have a mortgage, and your family can remain in the house because they can use those mortgage protection benefits to pay for the house. So you don't have to
Mm.
worry about a mortgage anymore.
Look at God.
That's
Mm-hmm.
a great benefit. And also paying college tuition for your children. That's another broader way to build wealth is if you people who don't have student loans,
Oh yeah.
we're all blessed and highly favored, but blessed
Absolutely.
and highly favored.
Right.
Okay. And that is a great way to do it, to pay for that college tuition for your children. And remembering that it can also pay off your debt, such as credit cards and car loans. So if you
Mm-hmm.
pass away and you have credit cards and you have car loans, and your loved ones can use those benefits to pay off the car loans, so now they don't have to worry about your car getting repo. So these things all tie into life, not just to death.
Absolutely. And this goes back to my previous class where I talked about the extra money that you weren't expecting, you know, the $20,000 bonus, or, somebody auntie left you 20, whatever.
That's right.
Don't just go and spend that frivolously. Invest, reinvest, because you didn't know what was coming. You didn't have plans on it. Even if you know it was coming, as long as your bills, regular bills are being paid, take that money and invest it. Pay off your debt, your credit, but also invest it so it continues to grow. That is all a part of generational wealth. This is just another avenue where you could use those funds, but they also have multi purposes. You have death benefits, living benefits, mortgage payoffs. Look, these are things that we need to have because things are happening. I mean, a lot of us are living with our parents and the grandparents, right? And then you've got kids, 4 generations in one house. A lot of things could happen within that house, and you don't want your family, you're gone and they're grieving, and now they're about to lose the house,
Hmm. That's right.
right? Now they're about to lose the car that gets them back and forth to work. You don't want to leave that burden. Start now. Start now. Just
Yeah.
go ahead and do it. Whatever extra money you have, like I said, we're already supposed to be saving $80 a week, right? I mean, a month. That was our little plan, our little challenge. Again, drop another thing off of there. So you stop going to Starbucks and so you could save your $20 a week. Cool. Now stop going to Chick-fil-A. Stop going to Panera Bread. Stop something else that you're spending. I know we're in a world of overconsumption, and COVID did not help because it made everybody start hoarding everything, right? And
Right.
we don't need it. You don't need it. You don't need it. The $10 that you buying extra tissue for 6 months away could be put into an IUL today.
That's right.
So let's work. We got to work together. I want us to grow. I want us all to be successful. And these are the ways in which you can cover and protect yourself. All right, let's see. So how can families, well, we kind of talked about that. Sorry. I want to go over a couple of myths and facts.
Okay.
One, don't be scared, guys. It's not scary. It's a real conversation about your real life. And as adults, we got to have those conversations because we don't know the day or the hour that God is going to call us. We
Hmm.
don't know. So it's much better to be prepared to
Yes.
make sure that you're taken care of.
Yeah. I always tell people be prepared, not postpared.
Right.
You can't be postpared. What
Exactly.
you're going to do is disable yourself, you know?
Absolutely. We can't work from the back, guys. We got to work from the front. As we're in a world of reactiveness, we're always reacting to something, a text coming through, a call. This ain't the time to react. This is the time to prepare and be ready for whatever life comes with. Okay. So as I got a couple realtors on here too, when y'all sell those houses,
Get
make
those
sure y'all take a
commissions.
percentage of that.
That's
We got to
right.
look at you. Make sure
Come
you
on.
take a portion of that and invest into your future and your generational wealth for yourself and your children, your family, your loved ones. So one myth is, and we kind of already debunked this, but life insurance is only for when you die. It's not. It is a
Uh-uh.
part of it. It definitely is a part of it, but that is not all that it is. It
Hmm.
is a living benefit that you can use to make sure that your family is okay today and tomorrow.
And this is the way I
Okay.
see
Mm-hmm.
life insurance is an opportunity for new life.
Right.
Because when people get medical illnesses and they have the stress of trying to pay bills and take care of their family, trying to feed their family, all of that stress on top of the illness is just taking you out quicker.
Right.
Anxiety itself will take you away from this earth. So it's an opportunity to have new life because if you pull that money out and you don't have to worry about
Right.
it while you're healing, that puts you in a whole new mental space. It's a whole new opportunity for your life and all of the people attached to you in that space. So don't look
Absolutely.
at life insurance as for death. Look at it as also an opportunity for new life.
Absolutely. Absolutely. You sum that up really well because exactly that's
Thank you.
exactly what's going on.
Mhm.
Um, we say so like only wealthy people need permanent life insurance. That's a myth. We all need life insurance.
That's
We
right.
all, every last one of us. Think about it like this. You might say, I don't necessarily need any on my child. But let's think, you might not need 200,000 because you're not losing an income generally if you lost a child, right? But don't you want enough time to grieve? Don't
Right.
you want to make sure that your child is buried properly, to have a good memorial, and then you can take some time off work? Because losing a child, I mean, I can't even imagine. You're going to need that time, and those living death benefits could benefit you in your time of grief. So
Right.
even if you just got it, your budget and your income, even if it was a small policy, of course we want you to get a policy that makes sense for your family, right? But even if it's 10,000, whatever that looks like, you want to make sure it covers whatever, funeral arrangements or whatever you have and gives you some time so you don't have to go right back to work. after 7 days or 10 days and deal with all of that when you just lost your child. This is important. Is
Yeah, that's another thing. Life to death. From the time
Yep,
you were born, you should be covered.
yep,
And when I tell you, it pains me to think about it, but I have close friends who have lost their children,
yes,
and it hurts me. So I know I couldn't even imagine the type of pain that they're in. I even think of not to realistically, you look at movies like John Q,
right.
right? What's the first thing that happened? Their son playing baseball. Like this might be a movie, but this is based on real life
Real
events.
life. Yeah.
Playing baseball, running, strong, healthy young man just passed out.
Yep.
Heart condition. Soon as they went in, first thing they say is, "Oh, you got insurance through your job? You didn't look at your policy.
Mm-hmm.
Oh, that's not covered. Oh, you need to go to your HMO. Oh, see if you can get a grant. Oh, see if
Right.
everything, but here is what you need, your peace of mind for your child. So I respect having a policy with your employer. I do myself, but you better have another one. Because what happens if
Mm-hmm.
you leave there? What happens if the company shuts down? Your children cannot depend on what's happening in this world when things are happening so quickly and
Mm-hmm.
things are shutting down in the blink of an eye. You really have to think life to death and not
Absolutely.
death to death because that's super duper important. It's imperative that we all understand that.
Yes, because there's a lot of life in between life and death.
Yeah,
Whatever age that is that you get to death, there's still a lot of life that you have to live. And nobody knows but God what we're going to face on a day-to-day basis. And you're
yeah.
right. I can't even imagine, the thought of that, right? You
No,
don't want to think about it, but we got to prepare for whatever is in the plan and
that's
make sure that we're taken care of.
that's right.
So one of the myths says you can put in any amount of money without limits. We know that's not accurate, right? You can't just put $1 million in there. There is a limit. It is based on your policy. So again, read, also
Yeah.
ask the questions. Now that you know this information, you know what to ask when you talk to that person. Again, you can call me and Syreeta. We'll hook you
Yes.
up. We got you because we're both
And there
licensed.
are
But
policies you can put $1 million in, but
right,
you
okay.
need the information because those are the policies that will pay you for the rest of your life.
Mm-hmm.
So make sure to reach out to us because we're going to compare. We're going to look at options. We're going to give you different, well, here's this, here's that. There are policies you can put your $1 million into, but you got to know what you're doing because one of the biggest mistakes people make is having the wrong policy.
Right.
Mhm.
And the wrong policy is just sometimes as good as having none. So you want to
Right.
make sure that you're asking the questions, that you're telling everybody what's going on. Um,
And that's also why I do retirement protection because
mhm,
people know if you have a 401k, you've been on your job 20 years, take that 20 years worth of money that's been matched by your job and put that over in another policy and
yep,
let them build. You can keep what you got over there, but
right.
move that money to a place where you control it and you
Hmm.
can be your own bank and you will
Right,
not regret it. People don't know they can do that, but you can. Sometimes we start a job 18 years old working for the government
right.
and now you're 38, you've been there for 20 years and you got money you can put into a policy to be your own bank. So it's important to know that that's an option as well. Cover your
Absolutely.
retirement, protect your retirement. Because when companies go belly up, they're taking your money with them.
Right,
And we've
right.
seen that happen.
And we don't want to lose any money that we're owed. That is ours. We don't want to give
Correct.
anybody the money. We don't want to do
That is
that.
correct.
All right. So we have a question in the chat.
Okay.
She said, what is the best way for a beginner to get started? If you were starting from scratch today, what would you do first? How much money would you start with? And what strategy would you recommend for growing over time? Oh,
I would recommend having a consultation. Let us do a consultation for you. And there are certain specific questions that we'll go through to kind of analyze how much you have, how much you're willing to put in without taking food off the table, right? How much, what your plan is. If you had a lump sum, do you have a 401k with money that's been sitting that can be put into a safer place so you can protect it? So I would say have a consultation with us. Let us go through the questions. Let us give you the options. Let us do comparables because a big mistake is people don't compare, right? Let us do comparables and find out what the best solution is for you because it's going to be different for everyone. And you might find some people like to do add-ons, which are writers. So they might say, this is what I got for me, and I added on for my spouse and my children. But there might be a policy that's better in whole for you and your spouse and your children, and you don't know it. So we really have to do a comparison to determine the best solution. I like to call it a complete solution
Mhm.
because, like we were saying, no two people are the same. We want to build you a complete solution, and that'll take a consultation. We try to give you some information, a video just like we're doing. You can review it and say, "Oh, okay, tell me more about this," and then we go through all the questions to see what's going to be the best combination for you specifically and how it can make sure you go through underwriting because that's very important.
Absolutely, absolutely. So so as far as how much money, of course, whatever policy is written, you will have a premium amount that you have to pay, and then based on what that is, there's a max that you could put in. To begin with, just get a policy. Make sure that you get the right policy and that you start your policy today. Depending on your income and what you have extra will determine what makes more sense for your budget and for what you can put in extra because we could tell you to put in 1 million if you got it, but if you don't have 1 million, it's kind of like I got to put in this 50, right?
Right.
So we got to make
Right.
sure that we are living within our means, we're not
Yeah.
overextending, but that we're maximizing whatever money we do have. And that's part of being a good steward over your money. And when you are a
And
good steward over the little, God will give you more.
a lot.
So we
And
got to
remember
make sure.
too, another mistake, people don't get enough coverage,
Yeah,
right? If you get a term policy, if you owe 200,000 on your mortgage, but you only get $100,000 in coverage, you're short $100,000.
right,
So you still put your family at risk for losing your property once you perish. So
yes,
it's really important too to look at what you can do, but also look at the option of what you need coverage,
right,
coverage wise. That's another mistake people say, oh, just give me something. I don't
right,
know, give me 20,000. I
right,
would recommend,
yeah,
right?
right,
Unless you are just looking for final expenses.
right,
You're in your, let's just say you're a little bit older, my parents' generation, 60s, 70s, sometimes they're like, just give me a policy so they could bury me and
right,
y'all can have the change. Well, that's different. You know what I
yeah.
mean? And there are different policies that go with that. So also keep that in mind as
And
well.
and also that goes along with your budget. So I would sit down with you and go over a real budget, meaning how much do you owe on your mortgage? What is the interest rate? How much will you be paying? What is the interest rate on these things? Because that will tell how much you need. Okay, I still have a $40,000. You might have a fancy car. You still owe 45,000 on the car. You need to make sure that that's covered on top of your $200,000 mortgage, or your kids been going to private school while you were alive and you would love for them to continue. That's something that you consider, right? So we would sit down with you and kind of talk about that as well. What do you have to cover and what is it that you would like to happen if this was the death part of the benefit, right? If something happened to you today and you left your family, what would you want to happen? You want them to be able to pay off the mortgage. You want them to be able to keep the car. You want your kids to still go to private school or the extracurricular activities. You have to consider those things so that you get the right amount. Because, like she said, you get $100,000 policy and you got cars and the kids in private school and the mortgage. It's still it's better than having nothing, right? It's better than
Right.
having nothing, but it doesn't cover the most important things and the whole reason for actually getting the policy.
And it's
So,
usually worth paying a little bit more
yeah,
for sure.
absolutely.
If the difference is $20, have it, you know.
Exactly. Hey, add it. Do what you got to do. So let me ask you something from you. What is one financial habit that you have implemented that has supported and is supporting your long-term generational wealth and your growing wealth as we speak?
I have an IUL.
Okay.
I've had an
Mhm.
IUL since 2004.
Okay.
That's when I learned about IULs. So having an IUL, teaching my son, my oldest son,
Mhm.
19 years old, have an IUL.
Yep.
That way it's building on different levels. My kids are 19 and 12, but they already understand. They know about the 50-50. They're
Mhm.
7 years apart. They know that if you have $200,000 benefits, right, because of your age, what's going to happen is part of the benefit is going to come out first to the oldest. He's an adult,
Right.
right? So
Right.
what you get, the two of you split that.
Right.
And then 7 years later, when he can access his part, you split that. So
Right.
that covers you with extra income you didn't expect because it's a part of the plan for at least 7 years, right?
Yes.
That period in between, you have this money here, mommy left us $100,000. We're splitting it 50-50. And then in 7 years, we'll get another $100,000 and we'll split that 50-50. Creating a plan, not just for me, but for my kids has become the habit, I'm doing trades. I am learning trades because I'm fascinated with it.
Okay.
Um, so doing trades, lightweight, tiny
Yeah.
steps, be-
Hey.
because it's the fascination for me, you know. And I think I started pretty early. Like when I was younger, people start buying gold, bring your gold here. Well, I went and was like, give me some of that gold because
Right.
it's gonna have that value when the American dollar drops, which it does every day.
Right.
That's never going to lose value. That's going to trade everywhere. So those are a couple of habits that I have is making sure to develop the plan, to pour into the right places. A lot of times I look at, I'm not a person, I'm a person who handles business a lot, but I am not a person who goes and hangs out and shops. And,
Right.
I'm an impulse buyer. See it, want it, buy it.
Yep.
So sometimes my habit has to be see it, want it. Hold on, girl.
Right. Pause.
Oh, oh, you don't need it. You don't need it. What do we have going on? Okay,
Right.
back to school. All right. So what is that going to cost? Okay.
Right.
What is okay? Let's get on the phone. Let's find out what it's going to be. Hey, how much are you putting in to my son's back to school? All of it? Great, wonderful. Okay, now I can buy it.
Exactly.
So
Right.
really, just communicating the needs effectively and being responsible is kind of the most important part for me because I don't shop. I'm not a shopper, but the impulse buy, gonna happen. It's gonna happen. So making the habit of saying, I don't need it. I just want it. And reviewing it and saying, where can I put this money at? That's gonna be better. I'd rather invest it in my business than probably anything else most of the
Right.
time. So
Right.
yeah,
Right.
those are some of the healthy habits.
Absolutely. I started quite right before COVID, actually, because I know if, like you said, I'll go in a grocery store and there's all these sales on this, and I'm picking up extra stuff that I don't need. I stopped that before COVID. I order my groceries and I use my Kroger app like a grocery list because my phone is usually with me. So if I'm downstairs and I'm cooking, oh, I need some pepper, I go and put the pepper in there. So I'm getting what I need and not buying excess stuff because there's a sale. We are the sale world. Everything it's a sale, 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 and we got to get it. We got to get the sale.
Yeah.
And it's like
Yeah.
you don't even need it. And I've heard recently, if it's not a heck yes, it's a heck no.
Yeah.
If you thinking, well, maybe I'm gonna use this when declutter, get rid. I'm downsizing as we speak. Like I realized that I just had too much stuff, and it was time to not buy it. Pull out the stuff that you already have and see what you have before you go and getting something else.
That's
So
right. Reassess.
yeah, definitely have to consider that. Before we wrap up, I just want to see if anybody else had any questions. If you do, you could put them in the chat. All right, I don't think anybody has any questions. So we'll wrap this up. Number one, thank you, Syreeta, for coming and talking with us and breaking some of this down. For some of you, you also were invited for tomorrow for my grand opening. And a part of that is welcoming me to the chosen agency where Syreeta is my upline. She would be my manager, my mentor. Um, and so
Partners. We'll be partners, though.
partners.
That's
We
right.
partners though. That's right.
Yes.
But and so, we're moving and we're shaking. There's opportunities if you're interested in
Yes.
working with us, that's an opportunity. If you want a policy, reach out, share, like reach out and ask questions. Let's get it scheduled. Let's do it. That doesn't
Yep.
mean you have to buy the policy tomorrow, but at
That's right.
least know what it looks like so you can put it in your mind as you're selling these houses, some of y'all. that,
Yes,
hey, when I get this, I'm gonna pay up a policy for 6 months. I'm
that's
gonna get
right.
go ahead and get it and do what I need to do until I sell the next house or until I sell the next whatever I'm doing, right? Or I get my bonus at the end of the year. I'm gonna go ahead and prepare for that. You want to keep those things in your mind. How can I use the money that I have right now to grow my generational wealth and cover myself? And the life insurance policies are the way, especially the IULs. I am a big fan of I'm a big fan because when I
I am
found
too.
out, I was like, what? I can do what? I was just amazed at the things that you can do.
Yes. Yes. Thank you, Tennille. Thank you so much
Thank
for being
you.
here and for asking a great question, right?
Absolutely,
That everybody
absolutely.
needs to know. We definitely appreciate you.
And thank you so much, you guys, for your support. I
Yeah.
will see you guys tomorrow for the grand opening at 7:30, as well as I will see you at 8 o'clock for Barakah the Muslima, where we talk about real life and how we're going to move through this thing with peace and God on our side, right? Because that's
Yes.
the way we got to move. So thank you guys. Thank you, Syreeta. I look forward
Yes.
to
Thank
seeing
you.
Syreeta. She will be back.
Yes.
I already
Oh,
got
yeah.
that. I
This
already got
book.
that.
This book.
Yes, it's already booked.
Yes.
It's already done.
Yeah.
But thank you so much, Syreeta, for your time. Thank you
Yeah.
guys for sharing your time with us. And we look forward to seeing you guys very soon. Everybody have a great night.
Absolutely. Have a great night. Thank
Bye,
you.
guys.
Bye bye.